All right, welcome to The Explainer. Today, we are digging into a really pivotal earnings report from mall operator Unibail Rodamco Westfield. They've just signaled a major shift, basically going from defense to offense. And we're here to break down exactly what that means for investors.
So let's dive right in. We're going to unpack the key numbers, get into management strategy, and try to figure out what it all signals for the road ahead.
Okay, the headline number right out of the gate is what's called AREPS, Adjusted Recurring Earnings Per Share. It's a key way to measure their core profitability. At €5.11, it came in almost 4% ahead of what analysts were expecting. That sets a really positive tone from the start.
But here's the interesting part, the real puzzle. By all accounts, this was a very strong report, so why did the market seem to just shrug? Let's dig into that.
Context is absolutely everything here. So the stock did pop. It went up over 2% when the news first hit, but then it just kind of settled back down. And the reason? Well, you just have to look at that one-month return, nearly 14%. The market had already placed its bets on a strong result, so the good news was pretty much baked into the price before it was even announced.
So, what's actually powering these results? Let's pop the hood, get inside the engine room, and take a look at the three big pillars that are driving this performance.
First off, their core business is just firing on all cylinders. You've got more people coming to the malls, the tenants are selling more stuff, and vacancies are at their lowest point since that huge Westfield acquisition. But honestly, the number that really jumps out is that 7.1% rent uplift. That shows real pricing power. It means they can charge more because their properties are the places where people want to be.
And this is so important in the current environment. Tenant sales are growing at 3.8%, which is comfortably beating inflation. This means they're not just riding a wave of higher prices. They are seeing genuine, real growth. That's a huge distinction.
And all that operational strength, well, it's translated directly into some massive stock outperformance over the last year. URW is up over 34%. It's just crushing both the broader French market and the European real estate sector.
Okay, pillar number 2, financial discipline. They're making all the right moves. They're paying down debt, selling off non-core assets, and, this is a big one, they just refinanced $1.2 billion of debt at a much lower interest rate. That 190 basis point drop, that translates into massive savings on interest, freeing up a ton of cash for the business.
And the third pillar is innovation. This is the really clever stuff. They're finding new ways to make money that go beyond just collecting rent. Things that don't require buying more buildings. We're talking about their new retail media agency, the super successful launch in Hamburg, and even licensing that powerful Westfield brand name to new markets like Saudi Arabia.
So you put these three pillars together, and what do you get? You get a very clear strategic shift. And this right here is the most important story from this entire report, the pivot from repair mode to a brand new phase of growth.
Now, the first half of the year, it was still about finishing that repair job, right? All these key actions, refinancing that expensive debt, securing asset sales, it was all about shoring up the financial foundation so they'd have something solid to build on.
And hey, don't just take my word for it. You heard it directly from the CEO, Jean-Marie Tritant. He explicitly framed these results not just as a successful repair job, but as the launchpad for their platform for growth.
And this is what that growth actually looks like. It's about leveraging the incredible assets and powerful brand they already have to create new, high-margin revenue streams that don't require massive new investments. It's just smart business.
So, with all this positive momentum, what's the one signal, the one metric that investors should really be zeroing in on as a true turning point?
Let's just cut through all the noise for a second. The fundamental shift, the whole story, it really comes down to this one thing.
This is it. This is the big one. For the very first time since that landmark Westfield acquisition way back in 2018, the value of their U.S. portfolio has actually ticked up. This is a massive milestone. It signals that property yields have finally stabilized and that the turnaround is now creating tangible value on the books.
Now look, while the European portfolio saw stronger growth, up 1.4%, the real story here is that small but mighty 0.4% rise in the U.S. For the first time in years, that value isn't going down, it's going up.
It's the confirmation, the proof in the pudding, that this turnaround is creating real, tangible value on the balance sheet.
Okay, so it's time for our next call segment. Let's put all of this together and see if we can find an actionable idea based on these trends we're seeing.
The outrageous but plausible idea here is a pair trade. You go long URW and you short a basket of U.S. regional mall REITs. This is a pure play on what we call the flight to quality. URW is proving it has pricing power in its top-tier assets, while those lower-quality regional players, they're still struggling with debt and valuation risk.
So the core thesis here is really simple. This isn't just a cyclical recovery for one company. What we're seeing is a structural divergence playing out in real time. The market is underestimating how much money is going to consolidate into these best-in-class assets like URWs, basically starving the rest of the pack. And that creates a pretty compelling opportunity.
So, what should you watch for next? Keep a close eye on their Q3 update in October and definitely their progress on selling off those assets. But the real question this report leaves us with is this. As this flight to quality speeds up, are we witnessing the moment where giants like Westfield don't just recover, but actually start to consolidate the entire premium market for themselves?
And of course, just a reminder, the information in this explainer is for informational purposes only. This is not financial advice. Please always do your own research and consult with a professional before making any investment decisions.